Hello, everyone. My name is Sheila Lamb, and I will be moderating today's webinar. I will begin by introducing the Capital Pathways program, introduce myself, and then pass the mic to our guest speaker, Kara Glasheen, an SBDC business advisor. She will introduce herself and take us through a presentation on organizing your business finances. Please feel free to ask questions using the Q&A function. We will respond to them as we go along. For questions that we don't get to today, please shoot us an email and we will be happy to address them through our no-cost one-on-one services or connect you to resources that can help you. I will share a recording of this webinar and slides as part of our follow-up email. So what is the Capital Pathways program? It's a program funded by the U.S. Treasury SSBCI initiative, sponsored by the Virginia Department of Small Business and Supplier Diversity, and hosted by the Virginia SBDC and George Mason University. We can start with the program overview, then go through the program eligibility, and finish up with an outline of the services we offer. Capital Pathways is a no-cost specialized SBDC program that helps Virginia-based small businesses and nonprofits build the systems and habits needed to become capital ready. Being capital ready matters because businesses that are less prepared can self-select out or fail loan applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity. Ultimately, only half of the loan amounts requested reach small businesses. To put things into perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who actually apply get their loans approved. To help address this challenge, Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. Who is eligible? Virginia-based very small businesses and nonprofits at any stage who face challenges accessing traditional financing. The services we provide include a guided self-assessment, legal structure validation, financial skills and tools, loan application readiness, and credit building advising. We start with a self-assessment that pinpoints your business's key gaps so we can connect you with tailored resources, either through our Capital Pathways program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through the basic legal questions, and we partner with a law firm which can help you with more complex topics related to business registration, trademarks, and contracts and agreement reviews. We also offer financial webinars or on topics financial basics like this one, and as well as financial statement preparation and QuickBooks training. Pardon me. Second. Our one-on-one tailored support covers business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, loan readiness, and lender prep. Our loan application readiness services include both webinars and one-on-one individualized support. These webinars cover topics such as what lenders look for in loan applications, interactive mock loan interviews, SBA options, loan options, and sample application analysis. We also have a partnership with a lender that provides one-on-one support to those looking for capital. Finally, our credit building advisor will help you review and interpret your credit reports as part of building an individualized credit improvement plan to strengthen your credit and help you qualify for better financing options and terms. If you're interested in getting started, you can reach out through our website at virginiasbdc.org/programs/Capital Pathways, or you can reach out directly at Capital Pathways at virginiasbdc.org. And I will share both this email and our website link in the chat momentarily. Now over to introductions. As mentioned before, my name is Sheila Lamb. I am today's moderator and serve as the customer support specialist for the Virginia's Small Business Development Program, which offers the Capital Pathways program. Today's session will consist of a 90-minute presentation. Again, feel free to ask questions throughout the presentation via the Q&A function. We will be responding to them as we go along. Any questions that we can't respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will share a recording of this webinar and slides in a follow-up email. Now I will pass things over to Kara to introduce herself, tell us a bit about her background, and start the presentation.
Okay, hello, I am bringing up my slides now. Thank you all for being here, and Sheila, thank you very much for the introduction. Today we are covering a lot of information, all pretty quickly. The audience that this webinar was aimed at is folks that are have an existing business or are planning to start a business soon. We'll go through in several sections of the presentation today, and as Sheila mentioned, I'm happy to take questions throughout at these sort of pre-scheduled stops. But that said, feel free to drop your questions as they come up throughout the presentation, and we will do our best to get to all of them. This whole webinar usually takes the full 90 minutes, and I'll do my best to keep us on time. If we don't have a ton of questions, we could wrap up early. Still happy to stay on at the end to answer what we can and follow up by email as needed. So again, my name is Kara Glashin. I've been a business advisor with the Richmond-based, the Capital Region SBDC for the past 2 years. Most of my time is spent supporting small businesses around financials, whether that's adopting your accounting systems, evaluating whether or not you might want financing, applying for financing, loans, lines of credit, or just trying to get a better picture of your business financials and where your business is going. So after this presentation, you'll get a copy of these slides, and as Sheila mentioned, you can even rewatch the recording if it's entertaining. So today, we're also going to start by thinking about this through the lens of someone similar, hypothetical person who matches a lot of folks that come and see me at the SBDC. So I'm expecting that you may have something in common with Sarah. She is a successful business owner in Richmond with a cleaning service business. And all in all, things are going pretty well. She's fully booked with customers. Her customers are happy. She's got a solid reputation. But the tricky part is around the financials. Come tax time, there's typically overwhelm or struggling to make sense of past documentation. She might have trouble proving income, sharing financial statements for a loan she might be considering. And even though things are going well, she's still afraid to hire help, bring on her first employees. And all in all, finds herself pretty stressed and overwhelmed with balancing both the operations side of the business and the day-to-day tasks. So if you identify with any of that, you're in the right place. Now, the way I'm framing most of this conversation today is around the difference between reactive business management and proactive. So a lot of folks who are small business owners, you have a lot on your plate. And so that means sometimes you deal with problems as they arise. You are acting like a firefighter, just putting out fires as they come up. This leads to scrambling at tax time, missing opportunities, and overall can contribute to a good amount of stress. So what we're hoping is that we can shift this paradigm towards a more proactive business management strategy, moving from the firefighter to the architect, where you're in a position preventing problems before they arise. You feel prepared, and you're seizing opportunities that come to you easily without having to do a whole lot of extra work. And most importantly, even if you're not considering financing or loans, having a good handle on your finances can just help you make confident decisions when it comes to operating your business. So that's where we're going. Again, we're hoping to help you move from maybe more reactive financial chaos into a more proactive financial control. This looks successful If you have the information at your fingertips, that means you've got some good financial tracking in place. You're able to look at real-time financial information. You're able to make data-driven decisions, and it puts you in a place that even if you don't need financing or you're not making big growth decisions today, you're going to be ready when that comes up, if it comes up. So our learning objectives are as shown. We're trying to get through really 5 sections today. These are all based on things that I have observed working with small business owners over the past several years. And we're going to start with just a discussion on separating their personal and business financials. We're going to talk a little bit about what basic bookkeeping can look like, including what softwares you could use, but also how you would go about this if you weren't quite ready or you didn't want to start on a software program right away. We're going to talk through some systems to track revenue, expenses, and receipts. And then we've got a little time today to go into some of the financial reports and what they can tell you about your business. That said, I have a separate webinar that I give every third month that goes deeper into financial statements. The next one being in October. So if you're really curious about that, I invite you to come join us again then. And then finally, we want to move into how you can use your financials to set goals and maybe even try forecasting your cash. So why is this so important? What is the cost of not having our financials well organized? These are some examples that are, again, based in reality that can happen if we're not prepared. If we think of a truck driver going for an equipment loan, if they aren't able to prove year-to-date financials, prove that revenue, you're not going to be able to apply and get a loan. It can look like a restaurant owner having to pay a CPA extra cash at tax time in order to untangle messy financials. It can look like missing tax deductions that you should have been eligible for. It can be missing the opportunity to get grants. It could be making the wrong pricing decisions. And in the long term, this has an impact because many small business owners have the hope of, at some point, potentially selling their company. And without good financial tracking now, that's going to be a lot more difficult to get a good price to find a buyer that's able to get financing. So, uh, when we see more proactive financial management, the sorts of opportunities, these sorts of opportunities can arise. So with organized finances, it's a lot easier to get loans. It can get approval, and I've seen as quickly as under a month. It can look like having the ability to confidently raise your costs, and generate more profit. It can help you build cash reserves if you operate a seasonal business, and it helps you stay on top of taxes so you don't have that balloon payment come April. So now we are getting into the first section, which is on separating our personal and business finances. So again, we're staying in this framework of reactive versus proactive. Uh, And when it comes to separation, reactive means you're dealing with it later. Maybe you have some mixed accounts, there's some business expenses in your personal accounts and vice versa. There's a higher personal liability risk. This can create credibility problems and tax complications. Versus if you have clean separation from day one or whatever day you are currently on, this helps improve your professional image. It helps with legal protection, compliance, and prepares you for growth opportunities. So again, why this separation is a non-negotiable. The first one that I like to share with clients is that really this is about the legal protection. When you create an LLC, that business entity, it's there to create some separation between you as a business owner and your business's assets versus your personal assets. And if we're mixing funds, this can be called piercing the corporate veil, as in you are piercing that separation, and it can leave your personal assets at risk. So we want to do what we can to protect ourselves and to protect our business. Additionally, just when it comes to taxes, both at the state and the federal level, the tax laws are complicated, and the cleaner our financial tracking means it's going to help audit proof your business and help make sure you get the deductions that your business should receive. Generally speaking, there's also a professional credibility to this. Bankers, lenders, other folks who may have access to or may need access to your finances see much more credibility in businesses that have this clean separation. And then it just comes down to for you, if you have clean separation, it's going to make it easier to really track the business expenses, what you're spending, and can reduce a lot of the confusion that comes with uh, all of the financial side of your business. So I wanted to take a little aside here to talk about, well, what is a business expense versus a personal expense? And the IRS has a phrase, and this is a link to the definition on the IRS website. It's called the ordinary and necessary test, meaning we want to be sure that if you are claiming a business expense, it is both a regular for your industry thing you would spend money on and necessary for you to generate revenue. Of course, there's some gray area here, and this is absolutely why it's a great idea to engage with a CPA to talk through the specifics for your industry. So typical business expenses are listed on the left side of the slide. It's all of these things that are directly related to you generating income. Everything from office supplies, insurance, software, professional services versus personal expenses. These are going to be things like your personal meals, as in you're not taking a client out to lunch. It's not a team building event. Gym memberships and fitness. Again, this can depend on industry. You could potentially make an argument for certain industries, but for the most part, these personal expenses should not be included as a business expense. Things like your hair appointments and personal care, same sort of thing, entertainment for yourself, for your family, any personal streaming or media services, your personal phone line. There are ways to deduct the business portion, but there's a certain way to handle that. And really, the question is, would you purchase this if you didn't own a business? And if the answer is yes, then yeah, perhaps it warrants a discussion with a CPA if it's unclear. No. If you're in a stage right now where you don't have this clear separation and you're working towards it, or if you're the early stages of starting your business, here are some steps to go through that process and make sure we've got it set up. So first part is making sure you have a dedicated business checking account. And so typically we want that to be a business account, which would be associated with your business's EIN, not your personal social security. There's a variety of banks. It's good to do your research and find out what are the minimums for the account. Do they have fees associated? Are there additional advantages of certain banks over others? And that's going to depend a lot on your industry. Next, once we have that separated checking, we want to make sure that we have a good way for you to make business purchases. And so this could look like a business credit card. A lot of times if you're early, you're new in business, you might have a lower credit limit, but with time as your business grows, you'll be able to expand that. Of course, business credit card is not required. You can certainly make your purchases with debit. There are some advantages to protecting when you're making online purchases of using a credit card, but to each their own, and your personal, I think, risk around having debt associated with your business is something that I've talked to a lot of folks about. Now, once you are able to, you have that separation, you have a way to spend money. The next thing is to think about your customers. Do you have a business payment processing that allows your customers to pay you in a way that it'll go directly into your business bank account? I've seen a lot of people allow their customers to pay through any means, personal Venmos, cash, all of this. It can create a lot of mess that can make it difficult for you to have a clear picture of your revenue. And so whatever we can do to streamline this that in an appropriate way for your business is a solid next step. Next, we should think about how you're paying yourself. As a sole proprietor LLC, or a partnership, the default is that you pay yourself through draws, and these are basically just transfers out of your business account into your personal account. If as a business matures, it may make sense to put yourself on salary. This is a slightly different setup. Happy to address questions there. And we'll talk about that a little bit more throughout the presentation. And then after all of this is done, we want to double check for any automatic payments and subscriptions, things that you might have had a history of charging to your personal card when you were in your sort of setup stage that now should really become true business expenses and be paid out of your business's operating account. So if you go through all of this, then you've gotten through a lot of the battle. You should be able to see all of the ins and outs of your business's cash all through appropriate business accounts. So some common mistakes that I've seen when it comes to separating personal and business financials include paying for some of these personal expenses with business cards that are maybe gray area business expenses without having checked with the CPA. Additionally, you could, if you're using, and it happens to a lot of people, you're out, you see something you need to purchase for your business, you don't have your business appropriate credit or debit card, and you end up using personal funds. If you don't have the proper documentation, the receipts, and make that reimbursement, that expense can get lost and it can make it harder for you to track it come tax time. It can come to forgetting to update those reoccurring payments. So month after month, it continues to come out of a personal account. And when it comes to owner draws, in an ideal situation, business owners, I believe, should be working towards taking regular owner draws that are predictable and ideally mimic a salary. Um, if you're here, my assumption is that you're a for-profit business. The goal is to generate income for you as an owner, and we want to make sure that that is uh, made a priority for your business and also tracked appropriately. So tracking owner's draws, if you're using QuickBooks and you're not on a salary, these are not a business operating expense. These would be categorized in the equity section on your balance sheet. And if you're using spreadsheets, it's good to just keep a simple list with a list or a log with a simple memo, the draw amount and the date. And again, consistent timing is something that can really look professional and smooth the predictability of your income out over time. All right, we are at our first pause. I do like to say at this point that again, I am not a CPA. I'm not here to provide specific tax advice, but happy to get into the questions that we have so far.
Great. We do have a few questions that have popped in. Kara, the first one, I'm just going to read it as is. Price, more about pricing decisions. Do you mean it has to be allocated in details?
I'm not sure if I understand that question completely, but there should be a good amount of thought, no matter what industry you're in, about how you'll be pricing your services or products. Um, and the reason why I'm talking about the importance in having clean financials and financial tracking is it allows you to go back historically and look at uh, your overall margins. So if you sell a product, this is really important because maybe your pricing isn't high enough and your margins are a lot lower than the industry standard. You don't have enough left over to operate your day-to-day business, whether that's covering rent or enough to pay yourself a fair owner's draw or owner salary. I think the topic of pricing can be a whole track in advising for you to work with Capital Pathways or SBDC advisor. So if you're uh, and in the meantime, when it comes to pricing, I always recommend looking up your competition, but also understanding your costs and then thinking about what intrinsic value you deliver. And it's rarely a simple formula for small businesses. So
Thank you. So our next question is, when it comes to apps, should I be separating business and personal use? For example, if my business requires an Adobe subscription, would it create problems if I use that Adobe subscription for personal projects?
well, I'm trying to think of how this is a recorded webinar, so trying to give the specific the by the book advice, right? You're by the book. If this account or service software is used primarily for business and there's a strong defense that this is a software that you need for your business, that sounds like a business expense. The technically IRS wants to see you estimate business versus personal use, but yeah, I would take that with a grain of salt. If there is a clear business case for you to have the software as a business, uh, and you occasionally, edit a birthday invite on there, as long as it's the exception, not the rule, I wouldn't have too many concerns. If you're following me.
Thank you. So next one, this person is a travel advisor. So expenses are tricky for me as a travel advisor because they can look like entertainment, but they are definitely expenses that I wouldn't have if I didn't own my business. How do I determine and or document to prove
Mhm.
experiences are essential to selling travel?
Hmm. And so I think that is a perfect example of the caveat based on your industry. So I think that it sounds like there would be a strong business case for things that would look fun to otherwise type of or another type of business. So it's really just about the documentation to be able to show if you were to be audited, do you have the receipts that align with like client activities? Taking simple memos as the expense comes up, even if it's a physical receipt, writing on the back, like, I don't know, I'm not, don't know enough about your business, but like putt putt with so and so, whatever it is, so you've got the name, the details. If someone were to really dig deep, they'd be able to say, yes, this is a customer. Yes, this is a business partner. And I think just having that material so you would be able to defend if there were any questions asked.
All right, next question, because we have quite a few that have come in. My company is research and development based and is unlikely to generate income for some time. Is it okay to cover expenses by transferring money from personal to business checking as needed? Does this maintain separation?
Yes, that is perfectly appropriate because of the way you said we are making that transfer from personal to business. And the way this would be categorized in your accounting system would be as an owner investment. And it can be a really nice thing to be able to have a clear picture of as you grow, because that's a documentation that you've been, what is it? You put stake in the game. Is that the right phrase? That you would have that history of investing in the business. And it is an investment. Uh, where it gets fuzzier is if you were using your personal expenses to purchase equipment and then not keeping a clear track of that. So what you're doing is perfect. Making that clean transfer and then using the business expenses to fund what your business needs at this stage.
And that rolls right into the next question. What if I had paid for business expenses with my personal account? What is the best way to reimburse or log it for myself?
Hmm. And so if you've paid for those expenses with a personal account, definitely make sure you save those receipts. I recommend keeping, if you're, it depends on how you're tracking right now. I recommend keeping a spreadsheet of the main expenses, making sure that you have the receipts there. And if you're using QuickBooks or something like that, um, there's a few ways that you could handle it. The goal is to make sure that when you look at your expenses at the end of the year, that you see, say you spent, I don't know, $100 of personal funds on a printer, that we see that expense deducted from your expenses in the appropriate place, and we would see a correlating owner investment. It is, I strongly recommend instead of using personal expenses to purchase, we do what we just discussed and you transfer from your personal to your business and then you make the purchase. It just is a lot cleaner when it comes to record keeping. Um, but the other way around is still doable. You just have to keep track of a little bit more stuff. Um, and as long as, and there's the difference, are you thinking of it as an owner investment or a reimbursement? You can treat it slightly differently, but that's something that an advisor can definitely work through in the specifics of.
Okay, so we still have quite a few questions. Do you want to continue on now?
Let's take one more.
Okay. So let's see. Okay, I have a home office for my small trucking company and I rent my apartment. Is that a business expense for tax purposes?
So as we're going to get into some deductions in a later section. So we'll come back to that if needed.
Okay. Do you want to
And we
handle these
could,
other questions, time permitting later, or
yeah, let's keep them
since you
in the
know where?
chat and I
Okay,
will get to everything we can.
fabulous. Okay,
And
thanks.
some of them may become more clear as we get through some of these other slides. So
Okay,
this
perfect.
next section is on the subject of bookkeeping. And we're talking about basic bookkeeping here. I'm not going to make any assumptions about what systems you might already have in place. But the whole goal, again, is to go from that reactive, I'm going to worry about this at tax time, I'm going to worry about this in the future, to being proactive, no matter how you're doing it. So you're tracking as you go and you know where you stand. That's going to help, again, with confidence, better decisions, growth opportunities, and that information becomes your competitive advantage. So when I put together this image of talking about all of these technically are forms of, maybe not level one, are forms of bookkeeping. Uh, there's definitely some casual businesses that are essentially running your business off of your bank balance. You look at your bank account, you say, I've got this amount of cash that I can spend, and you spend it. There's really no tracking going on. You wouldn't be able to easily say, I spent this amount on marketing or this amount on office supplies. And so we want to move up towards away from that. Level two might look like a notebook. You've got some general tracking of your big expenses, your primary sources of revenue, but we're not double checking it against the accuracy of your bank account, and there could be some errors there. And we get to level three is what I'll be talking about a little bit today. And this, depending on the type of business you operate, could be appropriate for your current stage. This would mean you've got a detailed spreadsheet with categories. Ideally, if you're using a spreadsheet method like this, your business doesn't have a ton of transactions and you've got a fairly simple business model, meaning customers pay you at regular intervals. Something like this might be a consultant who has a couple of clients that pay monthly. Uh, and overall, you have few accounts, meaning few bank accounts. You don't have loans or a lot of credit cards or activity like that. Once we get that complexity, we really get to the stage where using a free or basic accounting financial software or a paid software that can help give you the access to more data that you can be more confident of its accuracy. So I definitely recommend pushing towards level five once you have that high number of transactions, and you're managing several accounts, maybe credit cards or loans. You have business assets, and working with a bookkeeper as needed. Uh, there is an upcoming webinar on QuickBooks 101, I think in a couple of days. I've got the date at the end of this. So if you are looking at QuickBooks or trying to get into QuickBooks, that's a great place to go. Now, again, assuming we're just thinking, and even if I'm going to add this caveat, even if you are planning to use a software or already are using a software, there's a lot of work you can do outside of that software to make sure you're thinking about how you want things set up. There are a lot of decisions that you can make as the business owner, and what we're going to talk about today can be applied to a QuickBooks or a Xero or a Restaurant 365 or whatever it is you're using. So when it comes to categories or what you should be tracking. And this goes back to some of the questions around documenting business expenses or documenting things that you've purchased in the past. We want to make sure we're taking down some basic information. So ideally, you're able to track the date, if it's revenue, the customer who sent you the money, if it's an expense, the vendor who you paid, obviously the dollar amount. Ideally, we're also thinking about what revenue or expense category this fits into, and so this is very dependent on your business. If it helps, there should be a little description reminding you, why did you spend that money that day, and if applicable, if you have multiple accounts or if you might be paying some things personally, you should also make a note of which account you spent it from, or if you receive payments from multiple different um, Ways like if you take cash or Square, taking taking note of that payment what method as well. Then when it comes to categories within expenses, so we want to be able to provide uh, enough detail that helps you file your taxes or helps your CPA file your taxes, but not so much detail that it makes your financials really hard to read. So a lot of times that means we're going to be grouping some stuff together, like office supplies and equipment. That's a fairly broad category, but it should be able to give you a good picture of your business requirements. Advertising, marketing and advertising, that could include like pay ads or SEO consulting or um, even flyers that you could post around town. And as needed, you can always make things more complicated. But ideally, we want it to be able to be a snapshot that you can look at and quickly gain some insights about your spend. As a note, I recommend tracking owner draws separately from these main categories because these are non-operating expenses again and should not appear on your income statement or your P&L, also known as your income statement. So at the end of this call, I will also share some templates that I've made that can be used as for budget versus actuals. So both on the planning side and on the tracking side. In this presentation, I'll have some screenshots from these two examples. Again, we'll share the links after the call. And in the sample template, we have a revenue tracking sheet that allows you space to input all these, an expense tracking sheet, an owner draw tracking sheet, and then it also summarizes those inputs and can help with. We're going to talk about some of the reasons why this can save a little bit of time. So first, taking a look at what a revenue tracker would look like. Again, we're just making sure we have all that key information. But before we do that, we want to make sure we're thinking about the categories of your revenue. And this can be subjective for sure. So if you are operating a landscaping business, you might have monthly maintenance contracts, you might have one time big jobs. It might make sense for you to want to track those separately. The question from there is it easy for you to track those things separately? Because while it might be helpful for you to look at your historical income and see I did this amount of this type of job, if we create too many categories, it can be a headache for your bookkeeping. So simpler is often better, but at the same time, having more, if you have multiple types of revenue or multiple types of ways people pay you, it can be helpful to get more specific than just saying income or revenue. So this is something to talk through again with an advisor if helpful. Now onto the expense tracking sheet. Again, it is set up with inputs that should help you make sure you're documenting all those key pieces of information we discussed. And again, before going here, you can take some time to personalize what those expenses categories can be. And so again, I like a simpler, more clustered chart of accounts. So I might have taxes, license, and registrations all together. I might have software dues and subscriptions all together, office supplies and small equipment all together. And I'm also documenting, like I said, that payment account. So if I had to use personal funds before the LLC was established, before I had a business banking account, I'm documenting that here. Now, when it comes to owner draws, again, I've got a separate tab on this document. So we're tracking these owner draws separately. I've just got the date, the amount, and the notes. Now, all of this in the document shown. Also, it takes all these inputs from the lists that we put in. This is similar to what an accounting software does, but just more manual. And it gives us a summary. So we'd be able to look at, for a particular month, how much do we have in total revenue across our different categories? How much should we, if we had any cost of goods sold, that can help us figure out what our gross profit was, which is how much money left over after spending on those variable expenses, how much we had total operating expenses, and how much we had for our business's net income. Now, the sheet I will share, it does have some basic formulas in it. Most of it's just some formulas. If you have experience in Excel, these shouldn't be too scary. If you are newer to Excel or Google Sheets, this is a great opportunity to learn. A formula I use a lot is sum ifs. So that's provided shown here. It basically allows us to take that big list of inputs and create sums across the specific categories and the specific months. So that's all that's doing. That is the most complicated formula used in the spreadsheet. And then, like I said, it gives us some quick calculations, gross profit, net income, also known net profit. And that's coming from our gross margin, which is what's left over after our cost of goods sold, and subtracting out our operating expenses to give us, this also gives us an estimate of what we may be responsible for in taxes. So this is a good thing to track, especially if you plan on making quarterly tax payments. This can give us a good direction there. Now, also, I like to watch our cash because for small businesses, cash is super helpful, important, the most important thing to have a good handle of. And so in this version, typically we calculate our starting cash, our changing cash, and our ending cash. And so here, this is the first month in the model where we're starting at zero, and we can see that net income was 331, but my ending cash is only 181. I'd like you to pause and take a moment to think based on what we've talked about, why is my ending cash not 331 if that was my business's net income? And the answer to that is that there was some money taken out through owner draws that lowered the cash amount. So you took some money out of the bank account through that $250 owner draw, which makes up the difference. Now, no matter what tracking system you're using, whether you're using a spreadsheet like the one I'm sharing, or you're in a software, there's a critical step that small business owners might not be aware of, and that is doing your monthly reconciliations. And what this is, to reconcile means you are tracking that you're double checking that what you're tracking matches your bank accounts exactly. You can reconcile a lot of different things, but we're mainly concerned with reconciling your cash in your business bank account. And so this is recommended to do monthly. If you're using the spreadsheet that I've shared, what this looks like is going into your bank and downloading the bank statement as of the end of the end of the month and comparing it to that end cash that we see here. And so if I were to pull my bank statement and it was exactly 181, that tells me, okay, great. I've documented all of my incomes, all of my expenses, and I'm on track. If it doesn't match, it's telling you that you might have missed something. Um, and so it gives us that extra level of confidence that our tracking is accurate. QuickBooks and other softwares, they have a specific process to go through a reconciliation page, and just being aware of that process is a great first step if you're new to all this. So the reasons why we could see differences, it could be things like bank fees, things you don't think of have receipts. It could be a timing issue that maybe certain deposits haven't cleared. There could be automatic payments you didn't realize were getting pulled out of your account, which is definitely something you should be aware of. And when it comes to using a software, there can be more complications that would cause this issue reconciling. So this is important though because it helps you make sure that your data is clean, your reports are reliable, so you can use them to make confident decisions. Now, this is the first part of what I'll show a few times of time-saving systems. And it's not going to feel like it's saving you time when you start. It's going to take some time if you haven't been doing this. But I strongly recommend business owners who want to take more control of their finances schedule time on their calendar at a weekly, monthly, and quarterly cadence. At the weekly, you are updating your tracking, whether that's through a software or through a spreadsheet, just a day and a time, sticking to that is your financial Fridays or your money Mondays. And then monthly, we're doing that double check. We're reconciling against our bank statements, making sure we didn't miss anything. And quarterly, we're taking that time to review how did things go? Were you overspending? Did you meet your goals? Do we need to organize things so it's a little bit more clear? Cool. All right, and we are at our second pause.
Okay. Let us go back, cover some of those questions from before.
Mhm.
So the first one was, is it okay if I occasionally charge a personal expense on my business card as long as I don't include it as a business expense and I don't write it off? And the example is my business card is an airline credit card, so I get points, airline status if I use my business card for a personal flight,
Mhm.
which I
So
totally understand.
yeah, right. We ideally, I mean, ideally we don't want to be doing that because of what we talked about with the credibility, with the clean documentation. That said, if when it happens, making sure that it is appropriately documented as an owner draw, because that's what it is. You are using your business's money to pay yourself. And so I've talked to folks who have told me that I've never paid myself in the business. And you look into their books and they're buying airline flights, they're buying groceries, they're buying lunch. Those are owner's draws, and it does contribute to your compensation. So again, it's okay. I don't know. That's all I'm going to say there.
Let's see. And some of these questions you may have covered. I was
Yeah.
multitasking, but I always feel like it's good to reiterate anyway. So this next question, I'm just starting out. I still have to use my personal funds to cover subscriptions, etc. How should I document?
Yeah.
Sorry,
So
how should I
the
document?
the spreadsheet that I've shared, that is one tool. It is not the only tool, but making sure you've got the documentation somewhere that shows exactly what it was for, the date, the purchase, etc. If you are thinking about if you need a business loan, uh, they would ask for that documentation, including receipts, all of that. If you are, using it for taxes, and that can also absolutely be included in deduction. So yeah, I think my spreadsheet would give you a good start, and you can use a system that works better for you if you prefer.
Great. And this one, I'm not sure if you already covered this, but they're asking if you're going to cover how to keep track of expenses related to hiring part-time help for my business.
Sure. So hiring part-time help, the question here, I don't know if I go into this in great detail. It depends on what that part-time help looks like. Are they contractors? Are they folks that you do not tell when and where and specifically how to work? And so if so, they're 1099. They would be tracked as either a professional service provider or contract labor, something like that. If these are part-time W-2 employees where you are withholding taxes, you're running payroll for them. That is a bit more complicated. Uh, and you would have the tracking of it through your payroll processing provider, most likely. So what I do warn people about, and I don't know if this is related to the question, is if you are paying part-time help like under the table in cash, technically that can't be tracked as a business deduction. And unless you are keeping good records, you have their W-9 on file, and you plan on filing their 1099 at the end of the year. And there's some caveats there, but speaking in generalities. So if I if you are not taking all those proper documentation then and paying people under the table, then you are paying them directly out of your profits and not your business profits. So that should be thought through. Happy to talk in more depth about that specific situation though.
Okay, thanks. Is saving receipts required on top of referring to bank statements as a record of transactions? And if so, how many years should you save the receipts?
So again, it's about if you were to ask for proof, and there's certain things like you won't be able to see detail on your bank statement. So if you, for example, were to purchase a bunch of things from Amazon, all your bank statement shows is Amazon. It doesn't show that this is truly a business expense. You could be buying, I don't know, a robe and fuzzy slippers, and you wouldn't be able to get that information from the bank statement. So maintaining the receipts is recommended. And I've know that, and I apologize, I don't remember the recommendation for the number of years you should be retaining receipts, but I know there is a recommended years. So I would double check that, and do your best to, again, you're trying to prepare yourself. If you were audited, could you make a strong defense? And get through it quickly and easily.
Great. A follow-up to that question was, since receipts fade, what is the best way that's
Mhm.
free to save the receipts?
Mm. So there's quite a few ways. I mean, even a quick picture, a digitizing your receipts is a great thing to do. We'll get into this. This is in a future slide, but if you're using QuickBooks, there's a phone app. You can take pictures of receipts real time. A lot of people don't even save the paper copies as long as you have that digital file. So there's a lot of, like I said, there's different apps. Even just having a dedicated folder on your phone can work.
Okay. All right, I'm going to read the next three questions. They're all related.
Mhm.
First question, do you recommend QuickBooks for bookkeeping or any other suggestions? Second question was, do you have suggestions for free software? Third question, is there a free version of QuickBooks or are they all paid services?
So, starting with QuickBooks, we talk about QuickBooks a lot because it is the one I see most business owners use. It is, and currently the market leader when it comes to small business. It is not the only solution. QuickBooks comes with various tiers of service. None of them are free. It does have a sort of QuickBooks Lite. I don't remember what it's called. That's pretty cheap, and it doesn't. It comes with. It's made for sole proprietors. You can't customize your accounts. Um, I haven't enjoyed using it as a bookkeeper, but it is out there as a cheaper option. And then QuickBooks itself comes with additional tiers outside of that. For most small businesses I work with, the basic tier suffices. Outside of QuickBooks, there's definitely competitors. I know Xero is working hard to win over some small business owners. And then there's softwares that are specific by industry, like Restaurant 365 is big for restaurant folks. So when it comes to free software, the one I have some experience with is called Wave, Wave, and they have a free version. They also have a paid version that's still a little bit more affordable than QuickBooks monthly subscription. But keep in mind that free versions they don't have all the features. So, for example, Wave Free doesn't connect to your bank accounts, so it's not automatically importing those transactions. There's ways around it if you download your transactions and upload them as a CSV file, or you could be manually entering things in. But that's what I got.
We do have an attendee who says they like to use LegalZoom books for $9.99 a month.
Oh,
I'm not sure if you're familiar with that, Kara, but
yeah, no, I'll check it out.
okay. Let's see. Can you suggest any apps for receipt saving or tracking?
I think I don't remember off the top. I think I have one in a future slide.
Great.
And I have trouble recommending software in these sort of business support space because there's so many and it's changing so quickly. I feel like there's a new software every week. So
Of
yeah,
course.
and whenever folks find good extra options, I learn about them through clients all the time.
Great. Okay, that is
All
it for
right.
now.
All right. So on that topic, when it comes to tracking revenue, expenses, and receipts outside of the regular day-to-day bookkeeping of it all, um, we want you to choose the right tool for your business. And so there are a lot of tools out there that are really industry focused, and some industries you're going to need more than others. For some businesses, having a QuickBooks or a FreshBooks or a Wave, that might be enough if you're able to track your expenses, collect payment from your customers. For others, there's going to be different tools. Retail product sales, if you're selling on Etsy, you've got a lot of tools built in. If you're selling on Shopify, Square, same deal. Restaurants, there's Toast, there's Square, there's Clover. And as I just said, this landscape is constantly changing. And when I built this PowerPoint to today, I'm sure there's new solutions out there. And so taking the time to, before you commit or you subscribe to a lot of different tracking tools, really thinking through, do I need this? Will this save me time that will allow me to better serve my customers or manage my own time? Or am I getting marketed to? And sometimes the answer can be both, but come up with a few different solutions, evaluate what they provide, what the cost is, and try to make an informed decision. When it comes to as we mentioned, receipt tracking, the ideal is we want we want to make sure that you have access to this if you need it. So recommend trying to get into the habit of immediate capture. So whether that's taking a picture or using free apps, like this is the example I have here, Genius Scan, but that's by no means an endorsement. Check what's out there. When it comes to organizing, it can be as simple as a phone or a Google Drive folder that says business receipts in the year. But there are apps like Expensify, Receipt Bank, QuickBooks Mobile has a receipt tracking feature. And then there are additional fancier apps that auto categorize and integrate with your accounting systems. So, like I said, it depends on your type of business, how big of a need this is. And then generally, no matter how you're documenting them, taking a moment to write or document the business purpose. So lunch with client so and so discussing marketing strategy is more than enough. Um, all right. When it comes to additional tracking and these sorts of other deductions, potential deductions for a small business, things that come up a lot are mileage or vehicle expenses. It's very common for small business owners to use their personal vehicle for business. And I should change this bullet. It says track mileage or actual expenses, not both. You can track both, but you can only use one, the actual expense method or the mileage method when it comes to filing your taxes. For most business owners that I work with, and again, not giving tax advice, this is an observation, that mileage tracking is usually simpler. So you would be tracking how much you've traveled for business specific purposes. And then at the end of the year, you multiply it by the mileage rate. And this can be, like I said, through an app, could be through a paper logbook, through a spreadsheet. So again, so whatever you do to be able to provide defense if needed for your business travel. If you were to track by the expense method, it's a little bit that is keeping track of all of the expenses that go to your vehicle, and then trying to estimate based on something you could defend the percentage of time you use that vehicle for business versus personal. So, like I said, there are situations, strategies that you could work with a CPA with if you use if this is a major issue in your business. But these are some starting points. Also, some businesses have a lot of cash transactions, and here, that could mean you might need a daily cash log. Have good systems to make sure you're depositing it promptly into banks and you're tracking payment receipts and customer info. Additionally, if you are working out of your home, which we see a lot as there's multiple ways to think about how you could be deducting that expense from your taxes. That could be by calculating the percentage of your home used exclusively for business. And this can be a tough one. If you work out of a desk that's also in your family room, and then you track all of your home expenses and including mortgage, rent, utilities, insurance, etc. And you do that percentage of all of your expenses. Or you use the simplified method, which as of when I made this presentation, it was $5 a square foot for up to 300 square feet within your home. Again, it's not a bad exercise to look at trying to do both, gathering the documentation and seeing what gets you the better deduction. But keep in mind, it's one or the other. Generally speaking, for mixed use items, including, I suppose, software, uh, what is recommended is to calculate the percentage business use and to track the total costs. And then you can use that as another deduction. Sometimes you might track separately client reimbursements that if clients were to give you money and then you use that money to spend, we don't want to think about that as revenue because you're really just kind of passing through. So that's an example there to say, again, this is industry dependent. You might have a need that I haven't talked about where having good record keeping is going to help you out and save you time in the future. Again, thinking about this in terms of tax, what do you need to document? What will help you file your taxes and defend what you're filing if needed. Updating this time-saving systems we saw in the last section, we were just adding a couple steps to the weekly. And so now in addition, if you're using these different tracking tools, we want to make sure that you're using the service that you're paying for if you're paying for it, logging in weekly, checking that your receipts are up to date, and updating any specialized trackers you might have. All right. I've got some more questions.
Okay, just a few this time. One of them is just from an attendee who is saying for mental health agencies, just letting anyone know on the call this refers to that WAVE is not HIPAA approved. So, and again, I think that's where you probably have to fine tune to a business as to what you use, correct, Kara?
Yes, yeah.
Okay. But it's good. I just wanted to share that. So, is there any way to build your own system rather than relying on software like QuickBooks?
I don't, quick accounting existed long before QuickBooks, you know, uh, and I don't know what your specific technical capabilities are, so I'd say it's absolutely possible. Is it worth your time? That might be another question.
Right. And do you have an app that you recommend for to track mileage?
Again, I'm not making any official recommendations. I have heard people say Mileage IQ is pretty good, but there could be others out there on the market.
Let's see. So what can you share for a small business to consider when deciding whether to hire a CPA versus a bookkeeper?
Hmm. I think just knowing to answer that question, to ask that question is a great step, that bookkeepers and CPAs can be the same person, but they're not necessarily the same person. Um, it depends on what you need to support you. When it comes to CPAs, really their focus is often on filing your taxes. So, are they comfortable supporting you with that tax filing? The bookkeeper, in theory, should be helping you with that is this day-to-day tracking. Um, and sometimes you can find a CPA that offers bookkeeping services. That is that is appropriate for a lot of businesses where you don't want to accidentally end up is hiring a bookkeeper that acts like a CPA. So the I think especially when it comes to tax filing, this is an area of caution. You want to be very confident that that individual you are hiring is paying your taxes. I've heard too many cases of fraud where you think you're paying your taxes and it's not going to the government, and it's the government catches up with you eventually. So yeah, I think it's always good to find a CPA you can trust, even if it's just for discussions of deductions and making sure that your business is set up appropriately and you're using good tax strategy as needed. And they can be a little bit more of a strategist with you on the tax side. I don't expect that necessarily from a bookkeeper, but there are, very good bookkeepers out there. So I don't know.
Great. We had a couple more questions come in. An earlier question with the airline ticket. So this is coming from the other direction. If you buy an airline ticket for business on your personal card, how do you document or reimburse that back to your business?
And so it comes down to making sure we've got good tracking. You've still got that receipt. You've got the date. You've got all the information. The goal is to make sure that the other way, that was an example of an owner draw. Now this is an owner investment. If you wanted to just say, "Hey, I bought this with personal funds. I'm a single member LLC. I'm documenting it as an owner investment of the business." If you want to be repaid, that is also okay. You can uh, take the take the right amount out of your business account, document that purpose, and make sure that it's showing up in whatever tracking system you're using as the expense that it is. There are fancier ways to do this where you can be using journal entries and showing it real time, and then creating basically a liability on your bank account, on your balance sheet, that says that you owner are owed $527, and then you would make that payment to yourself and mark it against that. So that is probably more information than you wanted. But the end, as long as there's good documentation, we see that expense and we see that the money moved back where it should. You're in good shape.
Okay. Back to the question about the bookkeeper and the CPA. Can you confirm a bookkeeper should not be hired to file taxes?
So I personally would not hire a bookkeeper to file my taxes.
Okay.
That is, that said, there are people that that do that and do a good job. The difference is there's no professional certification requirement to be a bookkeeper. And that doesn't mean that there aren't very smart people that know what they're doing that are able to perform this. But there is a professional certification, a license you have to be a CPA. And so that's why typically, we recommend going to a CPA for tax reasons. It's
Okay,
just quality control.
great. Thank you. Okay, that's all the questions we have right now.
Okay, so now we're getting into a start on some of your financial reports that if you're doing all this tracking, you should start to have access to. So we're not going to go into too deep depth today, but at least talk about the income statement, cash flow statement, I think a little bit as well. So this is a metaphor I use across my presentations. I'm not a car person, so I might not be doing as good of a job as I think. But basically, the idea is your car has gauges, your business needs them too. And so, thinking about your financial statements as your car's dashboard, your business profit, your profit and loss statement, that's able to tell you, are you making or losing money based off of your business's operations, versus your cash flow statement and is going to tell you how quickly are you spending cash, spending gas, how quickly are you going to make it through slow, or will you be able to make it through slow season with the cash you have in your tank. And both of these we can use to look at trends and see, is your business growing, is it declining, is there anything we need to be aware of, and as we plan for the future. The key reports we're going to monitor, talk about today are your income statement and your cash flow statement. Your income statement by itself, I don't think is enough. And so being aware that there's other statements to check out there is again a good step. So first, we're going to talk about the income statement, which is also known as the profit and loss statement, and sometimes I'll just call it the P&L for profit and loss. And this is the one that gets the most attention. Typically, what it's covering in your profit and loss statement is all of your earned revenue, all the earned money coming in, your revenue, and then subtracting out all of your expenses, whether it's for, and really this formula should be updated, all of your operating expenses, but also if you use cost of goods sold, those cost of goods sold as well. And it's going to get you to your net income. And so this is another screenshot from the file I've discussed. And this is a summary version of an income statement. So here you can see, you can set it up to be either over a particular time. So it could be 2026, 2025. I like to look at it by month because this gives us the ability to see if your revenue is going up, going down, staying steady. And we're able to see more of a picture of what's happening in your business. Can you see, if you look at it by detail, you can see, do I have any expenses that are growing really fast? Like, am I paying a ton for software without realizing it? And you're able to look at 1 month compared to a prior month, and that gives you a little bit better context of the general health of your operations. Now, as a note, there are terms sometimes like net income, net profit, EBITDA. These are similar, but not exactly the same. In Financial Statements Bootcamp, we go into a little bit more depth there. When we talk, so beyond your profit and loss statement, there's your cash flow or your statement of cash flows or your cash flow statement. And generally, the topic of cash flow is just meaning beyond the operating earned revenue, operating expenses, there's other reasons why cash could be coming and going out of your bank account. And even good, well-run businesses can run out of cash from time to time. And so some common challenges I've seen, it could just be an issue of customer payment timing. You're doing a lot of work, you're sending invoices to your customers, and they're taking too long to pay. That can really mess up operations. And sometimes some industries, it's just part of it. So you need to understand your payment timing. For example, government contracting is often 60 to 90 days after the job is completed. And so having strategies to plan for that are critical. Also, if you're taking owner draws, but you're not taking them regularly and it's based off of your bank balance, this can destabilize your cash flow, and all of a sudden, you might end up in a place of a cash shortage because you accidentally took more than you intended. Credit cards can also throw the signal off because credit cards are allowing you to not spend that cash out of your bank account right away. But if you overspent 1 month, that balance could hit the next month, and it can send false signals about the cash you have to spend. So we don't want to over rely on credit cards or debit without an understanding of your business cash flow. And then it's just generally, there are some expenses that are fixed that occur every month, regardless of the number of customers you have. And so making sure you know what to be prepared for when it comes to things like rent, insurance, loan payments, things that might be due every month. Now, going back to this same thing, and I'll share this afterwards, our time saving systems, we've added just one little thing to the monthly step. And if you have the ability to produce these statements, we want to make sure you're looking at them. And so at a monthly basis, just checking back at that income statement, that statement of cash flow, and seeing, does this all make sense to me? Is it what I expected? Is there money going places or money missing? Do I need to reach out to a customer? Do I need to ask my bookkeeper a question? And it just keeps you, make sure you're staying on top of it at that monthly checkpoint. All right. It looks like questions have slowed down, at least for the time being. I'll pause and take a sip of my water if there's anything. Otherwise, we'll move forward.
I think we're good.
Okay. So now we are getting into using what the work we've done to track, to organize our financials, to look at our financial statements, to think about, okay, how does this lead into setting goals and forecasting cash flow? Because this is where the fun part can really be. So we want to go from hoping to planning. Another car metaphor, this is your business GPS. Um, Again, from the reactive framework, we're trying to move from this idea of I hope, I wish that things are going to be better this year, or I hope I'm going to make more money this year, or I hope they're not concrete targets, and this is based around a lot of wishful thinking, to a proactive um, framework saying that you have a specific targets based off of real data. This is evidence-based planning. It's around measurable milestones. It's thinking about the things you can control, which is the number of customers you bring in, new customers, the number of customers you retain, and can give you a real direction when you're planning your business operations month to month. So my recommendation is to set goals kind of in this level of maturity based off of um, where you should start and where you can go. So if you're earlier on, you might be setting some revenue targets. This can be based off of your historical information, but if you're brand new, it can be based off of industry data or local research. What do you want to do? How much cash do you need your business to generate in order for you to take this from a part-time thing to a full-time thing? What do you need to support your family? What do you need to cover taxes, health insurance, whatever other expenses are going on? And so starting with that, what you can control on the customer side. From there, we can think too about, we can move on to expense management. And this is about controlling cost. You've worked really hard, you're growing your customers, but you started to spend more money than you meant to. Can you make some cost cuts before it starts to take too big of a hit out of your profit? Can you find cheaper alternatives where you don't lose out on quality? And this leads you into profit improvement. So overall, small changes over time can make to major profit gains. And as a small business owner, we should be caring more about profit growth than revenue growth. Profit's what goes into your pocket. Revenue is what shows up on your books. And if all of this is going well, it's ideal to start to think about an emergency fund. A strong, stable business should be able to weather a few months of unexpected circumstances, especially if generating revenue depends solely on your activities as a business owner. So working towards building up an emergency fund to cover 3 to 6 months of operating expenses is a solid target. And if we've done all of this, now we can think about growth investment. Whatever it is that can take you from where you are now to where you want to be. And this is different for everybody. I don't think aggressive growth is the right move for all business owners. So thinking clearly first about your goals and then about what you need to invest in to get you to wherever that is. Bottom line, set any of these goals, you need to first understand your numbers. So when it comes to cash from here, we're going to talk about cash flow forecasting, which is trying to predict how much cash will be in your business account in the future. In a reactive sense, it's you're planning, I'll just find more cash, I'll find more customers. If I run out, I'll get a loan. Versus proactive, you feel pretty confident that you're going to have enough cash for the next 3 or more months. So, step one is about understanding your revenue. What's driving your revenue? Do you have reoccurring known income that you are pretty certain is going to be there? Then what can you think about when it comes to expected sales? Do you have customers that you think you're going to add? Any events planned that you think are going to drive revenue? And is there anything to take into account when it comes to seasonal adjustments? And then on top of the revenue side, do you have other sources of cash coming in that aren't revenue, whether that's you deciding to make an owner investment, and that should be an active decision in how much you want to invest and when, or do you have any grants or loans or any other sources coming in? Then we think about the cash out. And so this is the typical operating expenses or the any cost of goods sold that you might have. If you've been in business for a while, you should have a general idea of the expenses coming out of your account from month to month. Maybe you add a little bit of extra buffer for emergencies. Um, and then you think about those non-operating expenses as well. There's non-operating cash outflows, and that's owner draws, loan payments, maybe equipment purchases if it applies to your business. And so just gathering up the other side, and then we calculate based off of your starting cash. Starting cash plus cash in, cash out, and that gets you to your ending cash. This is the information you would find historically on your statement of cash flows. Now, in a very simplified example, the way this would be approached in the sheet that I've shared, which also includes a budget tab. Blue cells are cells that we enter values into. And so for this hypothetical business, I might say I'm starting up in January, but I don't think I'm going to land any customers or get payment until February. And I want to think about this in terms of my uh, known pricing, the number of customers using formulas to help me think, well, by March, I'm going to have 2 customers paying $500 each. And then I'm thinking about my other services. These are all basically expected sales if I'm setting this budget in January. I'm thinking about any seasonal adjustments, and I'm thinking about where I'm getting cash from the business. And maybe to start, I've decided I'm only going to invest $500 of my own money to kind of get the basics up and running, get me on the right softwares, buy a couple of things needed for my office, whatever it might be. And then I can look at my expected cash out, which is operating expenses. And maybe my first month, I'm not planning on taking owner draw, so it's zero. And then this spreadsheet does this for us. It takes our starting cash. If we go through and we fill out the budget with all of our expected earned income, all of our operating expenses, this gets us to calculate our change in cash, which gives us our ending cash. At this feels complicated if you haven't done it before, but as you're in business and you're doing this, maybe every 3 months or every month, you're looking forward to try to get an estimate of cash in, cash out. You're going to notice patterns. It's going to get easier. And hopefully the process will smooth out over time. Another note is or I assume everyone here is a Virginia business. And of course, Virginia, we've got seasons, which is one of the best things. But depending on your industry, it can add some complications to your revenue or your cash flow. So this is just a note to when you're thinking about that seasonality that you're planning for how it affects your business. So if you have been in operation for the past 12 months, it's a good opportunity to look back at your books. And is there any variation that isn't explained just by growth? Is there variation that were just slower than others that maybe you expect or you didn't expect? And this can help you plan for cash reserves when that season comes up next year. So here is a quick growth planning framework. And again, we want to set goals based off of where we are right now, based off of the financial data we have access to. So again, if if where you are right now is that you don't have a good line of sight on your business finances, that's a great goal to start with. If you've done that, you've got solid tracking, and you've been able to build up cash reserve, or you're considering making some growth planning decisions. First, again, we want to make sure the business has some cash reserves. Is there at least 3 months saved up? The answer is no. It's a good time to build those reserves. If the answer is yes, then we want to ask ourselves, are we consistently profitable? If no, it's a good time to look back at those expenses or come up with strategies that might boost your revenue through ideally low cost or free activities. If your revenue is if you're profitable, we want to see, is this going upwards? Do we see revenue growing? Is there an increasing demand for your business? If the answer is no, then let's work on driving that demand some more. Uh, if your revenue is growing, do you have debt, and is that debt currently manageable? If you have a lot of high credit card, high interest debt, then we want to make sure you are paying that down, consolidating before looking to make any major investments like hiring employees, major equipment purchases, marketing campaigns. Of course, this is all ideal. Real world is messier. This is just a starting point as you think about where to focus your time and energy when it comes to long-term growth. So I wanted to share this as an action plan that all of you watching can start on this week. So, depending on where you are, if you don't already have a business bank account, it's a great time to find one. You can start setting up tracking systems. You can organize your receipts. You can take that action by blocking off a 30-minute time block every month, maybe a 15-minute block every week. And as needed, it's a great time to check in with a small business advisor through Capital Pathways or through your local SBDC, and then getting yourself towards this cadence of weekly, monthly, and quarterly financial review based off of the steps we talked through today. Now, remember Sarah from the beginning of our presentation, it takes some time. These changes don't happen overnight. But for Sarah, we're to say she spent 6 months starting with small, simple changes and built them over time. She separated her expenses. She set up a bookkeeping routine, and she was able to build up an emergency fund and even hire an employee. So the results of this reduce panic, allow you to take advantage of loans more quickly than might otherwise be possible, and ideally just moves you to a place where you can spend more time working on the business and not just in the business in that day to day. So this is my hope for you all, no matter where you are. You can take some small actions this week, next month, to hopefully reduce the stress, plan something exciting, and meet up with some advisors or other folks in your network who can support you along the way. Quick plug for some upcoming webinars through Capital Pathways. As I mentioned, August 19th, we've got QuickBooks 101. That is another advisor. She's incredible. She's a great resource for QuickBooks. There's a Spanish language presentation coming up at the end of the month. And then early September, there's specific information about loan programs. So good stuff coming. Stay up to date on the webinars. There's always good ones coming out through Capital Pathways, and I will be back next month as well. So, any final questions before we wrap up?
Kara, thank you. That Spanish one is on credit to capital.
Thank you.
You're welcome. I can't say because I speak the language well, but I set it up. So we don't have any other questions right now. A couple of thank yous have come in, and I also want to agree. Thank you. And if there are any questions, I referred a couple people to the Capital Pathways email. If you could go ahead and just send those questions off to that email, we'll get those questions answered. And I know that you have a hard stop, Kara, for your next appointment. So let's see. Okay, so someone's asking to share the link to the registration for the next webinars. In the chat, I did place
Mm.
It's virginiasbdc.org/training. I will also note that you will receive these in the follow-up email I send out. You will also receive these registration links. So we'll make sure that you get registered and hope that you can attend. So, Kara, do you have any last words of wisdom before we
No, no,
close out?
I think we covered a lot. Thank you everyone for the many questions at the front end. I think we ran through a lot. So,
I agree. Kara, thank you so much for your time and this excellent information. And we do look forward to our future sessions with you. And for everyone else that has joined us, our time together has come to a close. The recording of today's session and slides will be shared as part of a follow-up email that will be sent to all participants within a week of this webinar. Again, if we're not able to respond to your questions, please send us an appointment request through our website or just send an email to us, and we will be sure to help you or connect you with resources that can support your business needs. Thank you, and we hope to see you all at our future events. Thanks, everyone.
thank you. Thank you, Sheila.